Can you maybe talk a little bit about your approach to value investing? What do your principles, your process look like, and how does that help you find companies that you would own for decades?
I think one of the big things I learned from Buffett is that you sort through the world for things that you can understand and know. What's fascinating about the stock market is securities move up and down every day on the basis of all kinds of information. And I think there are many businesses, it's just unknowable what they're worth. But they still trade, they move up and down. It's kind of an interesting sort of phenomenon. What we do is we kind of screen for the world. I would screen the world for things that we can predict and know. And that has something to do with what we know, but it has a lot more to do with the characteristics of a business that have a high degree of predictability. And what we think about when we're buying businesses, these are bonds, really. We're looking for very, very high certainty, companies that we can theoretically sort of own forever. And that's the most difficult thing to do in investing, is not building a financial model, but predicting the durability, of a business, particularly in a world where there's constant technological innovation. When two students, who dropped out of, ABC, what used to be a great university, and rented a garage, and they come up with some disruptive technology, that's a very hard thing to envision. So you have to think about, think about moats. Michael Porter, who's another mentor of mine, at least, business school professor of mine, very sadly has severe Alzheimer's now. But the first book he wrote is probably one of the most cited pieces of any kind of research. And so you should, give it a read. Just thinking about the various balances of power, if you will, in the forces that affect a business.
So I'll start with our principles, which, if some of you know our firm, we literally have carved in stone just to make sure that we never forget them, which I think is a really helpful way to visualize it. And you kind of can memorize these principles. But I would say fundamentally, I think first and foremost, what we're looking for are really great businesses. And what I mean by that is ultimately, we're looking for businesses where we can have a very high degree of confidence what the future will look like out 5, 10 years. And a lot of those things, I think, ultimately come down to, if you want to call it a Porter's 5 forces analysis, but really understanding the competitive dynamics, the secular growth opportunities, and feeling that you can assess with a very high degree of confidence about how a business can end up. It'd be a lot better than we think, but really, in particular, this concept of margin of safety, making sure it can't be a lot worse than what we think. So we put a high degree of what we call business certainty. So I think, Bill likes to say it's kind of the simple, predictable, free cash flow generative business, which I think is a great line. But that's really the thought process behind what we're looking for.
I want to get into your psyche for a second, if I may. So many companies have principles, but Ryan mentioned it and I actually saw it. You carved those principles in a stone tablet, and I think it's all over the office, right?
Yeah.
It's almost like your own 10, in this case, maybe 8 commandments. How did that come about?
Well, it came about by when we veered, right? So we had a great initial first, kind of dozen years of Pershing Square, and then we made the biggest investment mistake, certainly of my career. And when you're CEO, you take credit for the mistakes. 100% credit, you share credit for the successes. And the mistake made, had we stuck to our core principles, we'd never made the investment in the first place. And we'd always talked about these principles, but we hadn't sort of engraved them in stone. So I told a member of the team, come back with a piece of granite and a chisel, and we're going to put this up on the wall. And he came back with a deal toy. Has a little weight in it, so it feels and looks a little bit like stone, but it served the same purpose. Actually, people underestimate the power of almost like checklists. Consider it a checklist. And the advice to the team was, if I ever veer, just hit me over the head with this thing. And it worked. And we've actually had the best, since the development of that little tablet, we've had the best 6 years in our history. And one of the beauties of the investment business is you can recover even from big mistakes. The power of compounding. Yes, never lose money, but when that happens, you can recover.
Bill Ackman says the secret to finding a company you can own for decades is actually simple. The number one rule is this: understand the business really well. How does it make money? Why do customers keep coming back? What's stopping competitors from taking its market share? Once you figure this out, Ackman believes 90% of your investing job is already done. Because when you truly understand a business, you don't panic during short-term noise. And you will know if it can keep compounding wealth for years. His advice: don't chase complexity. If a business is too hard to understand, leave it. Instead, focus on high-quality companies with durable advantages that you would be happy to own for decades. That's where real long-term wealth is built.